Welcome back to the ETF Inspector. It's Sunday, August 10th, a little after 8 o'clock in the morning, and this is our week look ahead and payment distribution guesstimate video for YieldMax weekly paying option income funds, ULTY, the Ultra Option Income Strategy Fund, and LFGY, the crypto industry and tech portfolio option income fund. Wanted to highlight, we're at 2,950 subscribers, so hopefully maybe by the end of today we can get that to 3,000. This is definitely everyone's favorite video. I get 3 times as many views on the Sunday video than the rest. So if you haven't clicked the like or subscribe button, please do so. Just a reminder, I'm also on X at ETF_Inspector1. I post videos when they are released, letting you know times in case you like to get in the live chat. Also repost the trades made by the 0DTE Roundhill funds, and then distribution announcements, and then highlight reels like when ULTY hit 3 billion or 2 billion. And obviously big shout outs anytime anybody becomes a supporter of the channel. Super appreciative of that. All right, coming to you. I'm on vacation if you haven't been watching the other videos, so this one will be a full length. I know this is everyone's favorite, so this will be the full length video, but throughout the week I'm gonna have some shorter than usual videos just so I can get back to family time. But I got up a little early. It's not that early, but some people are still sleeping in the house, so I am in the driveway sitting in the family van making this video for you. Okay, we are going to bounce back and forth between pages a little bit to make our way. We're not just going to jump right out and give you the guesstimate. That's no fun. So we're going to kind of give a quick overview of the week. Right, there was approximately 500 trades made within ULTY for the week of August 4th through August 8th. So we're not going to slow down or anything. This is just showing you there. These are Monday. We've gone to Tuesday, Wednesday, still Wednesday, Thursday, and finally Friday. All right, so we went through 500 trades, copied every line, put it in. So they only give you what it was, buy or sell, the contracts and the price. I just write a formula in the next cell to multiply it all out. Then all of these get totaled up and go into each day up above for tracking. So trading wise, on Monday they made $14.2 million. On Tuesday they lost $19.7 million. Wednesday increased $30.3 million. Thursday down $50,000. $50 million, 50.4. And finally Friday down 1.1 million. That resulted in a total trading, we'll call it deficit or debit, of $26.6 million. On each of those days, you also had share value increases or decreases. A lot of times a big swing one way goes with a big swing the opposite, but Monday wasn't the case. Monday we were up 87 million in value. If you remember last Friday we were down like 92 or 94, so Monday was that bounce, got almost all of it back, got more than the rest of it back on Tuesday, 18.7 million. Gave some up on Wednesday, decreased by 34.6 million. Nice Thursday, up 64.5 million, and finished out the week with another increase of 13.5 million. So for an overall increase on the week of 149, almost 150 million dollars. It doesn't feel like that since our share value is low, but that is because we basically recovered from the week before. Let's see if we can not get slammed. The week before we had an overall decrease of 84 million. So I'm gonna hide those back because they take up too much space. So on a 2-week period, we're up close to 66 million dollars. Not bad, but that's why it doesn't feel like we had this monstrous week there. All right, before we get into the estimates, we need to see how we get there. Right, so we know how we just did the income, so we can reveal that one. income's based on the trading profit and loss. Well, if they lost $26.6 million, then they can't spread that around to us. They would have to collect 5 cents from each of us. It'd be a negative. So the next, it's based on the IV, but we got to talk about how we got to the IV first. All right, so we only do this once a week. All right, this is our Sunday. We got the weekend time to watch a longer video. And then I only update these once a week as well. So I just want to help you understand this isn't a perfect system. When you watch the interviews with Scott and Jay, they say that they are taking either instantaneous or like 7-day IV. I'm having a harder time being able to find that in any type of a quick way. So I'm still doing the 30-day IV. I'm looking to switch over to a more of a weekly IV, especially since these are weekly funds. But since I'm on vacation, I wasn't going to try to make it happen this time. But they also take into account the IV of every single trade. Now, the only way I know how to do that is to manually look up every single option. And I apologize, but I don't have that kind of time. I actually don't even have the time for what I am doing. I get lots of side eyes from my wife. Oh, you're making a video again? But it's all right. So let's get into it. We've got on the right here the weighting. So that's how much money is in that particular underlying or stock. So for a firm, for example, 77 million out of the total of all of the holdings. So before I go into them, they're fairly evenly allocated. The average is about 4.5%. So we get a little above it, a little below it. We don't get too far out of whack before they start reallocating it to make it a little more even. So that's what this percentage number is. That plays into the formula. And then I go to marketchameleon.com. It's currently the website I like to use. So you type in the underlying. So ULTY's here, but that actually doesn't apply. That is how ULTY itself trades, in that $6 to $6.30 range. It's not very volatile. That isn't how we come up with the IV for the holdings of ULTY. Okay, but I just type in each one, come over here, 30-day IV, and input it into our spreadsheet. All right, so starting out, we've got two new stocks, Affirm Holdings and Applied Materials, that just got added. They both have earnings coming up. One of them is this coming week. The other is the week ending the 29th. I think Applied Materials was this week. So 82% IV on Affirm, so that's going to help us with our IV. Not a ton of money into these. It seems like they're just going to be playing these for the earnings. These might be short term, play the earnings and then get back out of them. But 2.6% into each of them, 82% on Affirm, 39% on Applied Materials. Now I did go ahead and look up these option trades just to see, and the Applied Materials option trade for this week was like a 55% IV as opposed to that low 39, because that almost doesn't make sense to get into it. Affirm's is kind of in that range. They're the ones that their earnings is in a couple weeks, and the week of their earnings, it jumps up into the 90s. All right, AppLovin, 5.3%. It dropped to 56.3% IV. You're going to see a theme of almost all of these dropping this week. My assumption would be because we've gotten past earnings on the majority of them, and so at earnings time, when you're selling across earnings, the IV is higher because there's a whole lot higher potential that they come out with either good news or bad news, and they either take off or drop a lot more than just during the rest of the quarter. So it seems like we got past IV or earnings on a lot of these, and we've got a lot of decreasing IVs to announce today. AST Space Mobile, 5.5% of our holdings. It dropped, but it's still a 94.6%, so that still helps us a lot. Same thing with Bitmine Immersion. They did not drop, up to 5.8% of our holdings and 140.6% IV. We love this one. It's our biggest one IV wise, so this is helping get you a nice high distribution based on the way the math works for the IV estimate. Webull, a little over 3%. It decreased this week to 88.6, still nice and high. Coinbase, we've got over 7% of our money. It's odd to see us get that far away from the average holding here, but 53.5% IV is a decrease from the previous week. Galaxy Digital, about 4.25% of our holdings, is a decrease, but still nice and high, 86.2%. Robinhood, 4.6% of our holdings, a decrease to 60.9% IV. IonQ, about 5.25% of our holdings, is a decrease to 73.9%. This is another one. They had earnings this past week, so now they survived that. No major swings, and so the IV dropped a decent amount on that one. Mara Holdings, a little over 4.5% of our holdings, 60.1% IV is a decrease from last week. MicroStrategy, just about 5% of our money's in there. It's a decrease to 52.9%. For them, that's still running around average. They just were up last week. Nebius Group, over 5% of our money's in there, decreased to 71.7% IV. Oklo, over 5% of our money in there, 99.2% IV is a decrease, but that's still nice and high, helping out our calculation. Palantir, 4.3% of our money with a 46.4% IV. That's a decrease. Reddit, a little over 4% of the money, 60.8% IV is a decrease. Rigetti, we got another decrease to 84.8. Still nice and high though. 6% of our money in there. Rocket Lab, this one, and I had these symbols up at the first two as well, but I didn't explain why. 3% of our money into Rocket Lab. I just have a plus/minus because we didn't have them last week, so I don't know whether they were an increase or decrease from last week, but 73.9%. And that's a crazy stock. If you heard my story, I was into these guys back when they were $5 and $6, and I sold them when they were like 21, so 44. And we're not talking about a real long time ago. Go look at their stock chart. Super Microcomputer. Surprised how low this one's getting. 2.75% is a decrease to 63% IV. New Scale Power, just over 5%. That's a decrease to 89.4% IV. Unity Software, it's a new one this week. It wasn't new Friday, but we didn't have them last week. So we don't know whether that's an increase or decrease. 65.7% on 3.3% holdings. And finally, Upstart, 5.25%. That's a decrease to 64.2%. All right, so you heard a whole lot more decreases than increases. So what we do, the formula is you multiply the 30-day IV by the percentage of the money that it represents, and then you add each one of those together. So you'll see the formula is each column B4 is the IV or B, and column C is the percentage, and then you just add all of those up, and it's 74.3. We were in the low to mid 80s last week, so that is a very large decrease, and our fund price did not close very high either. So the way we get our estimate is we take our closing price on Friday, we multiply it by our IV, and then we divide that by 52 weeks because it pays out weekly. And our IV estimate is 8.62 cents per share. I know a lot of people are not going to like to hear that, but it's just a math problem. Now, again, that's not perfect math because I don't have access to every single option trade, so it could be better than that. But I got to come up with a guesstimate from there, so I take that information into account. I look back through past distributions and dollar ranges and percentage ranges, and then kind of just see, what I think. I don't think that we're getting 10 cents this week. I think they'll bump it up over 9. But if you've watched my videos lately, the IV has been pretty close to dead on, and I've been saying I got to stop changing it. So, but I think we're going to have a roughly 9 cent, 9.1 cent distribution. Okay, so that's the estimate. That's ULTY. That's what you're mostly here for. But if you're more than just want to hear how many pennies you're going to get, right now we go into a underlying by underlying, stock by stock, look at the options that have already been sold, how far in or out of the money they are. So we got an idea of what this week looks like, what kind of trading ranges we're looking for these stocks to trade within. And I'll caveat that with they would be happy if every single stock in here went to the moon and blew right past their strike prices. So you would think that, all right, so let's say a firm goes up 10% this week, and you only sold it out of the money by 7%, so now you're going to have to pay to close it. You lost money. Well, not really, because you collected the premium for the amount of time you had left. You also had the intrinsic value, right? So that first 7%, your shares make that without your option being hurt by that, as far as the money in versus money out. So I don't want to take too long sitting here and explaining this, but if the stock, if you sold it basically right at the money, like AppLovin on this trade won't end up going real well for us if this one goes through the moon, because we're already in the money to start. So we don't have any room for our stock to increase in value before we start having to pay, dollar for dollar. But anyway, all right, a firm has a single strike price, $77.50. It's 7% out of the money going into the week. ULTY trades a collar strategy. So the color will be what we sold, and it's the price that we would need the stock to stay under for the week in order to keep the most amount of premium collected without having to pay a large value to close it out. The non-color lines beneath that are the protective puts. So we don't really go into them real big, but just understand that that's where we have purchased protection in the event that the stock drops. Now, it doesn't need to hit 67 before this starts making money. If the stock price goes down, the value of that $67 put goes up. Once it hits 67 and goes further, then it moves dollar for dollar together. And that's the same for each and every protective put. Okay, Applied Materials calls sold at 190. They are 2.7% out of the money, with the current price in the 184 to 185 range. AppLovin, they've got two strike prices, 452.50 and 470, pretty evenly split, 1,739 and 36 contracts. The first one's 0.76% in the money. The second is 3% out of the money. And again, you see your put protection at 400 and 410. AST Space Mobile, sitting at 46.63. They've got calls sold at 50, 51, and 51.50, all expiring Friday. Kind of split up, the largest quantity in the middle, 7.2, 9.3, and 10.4% out of the money. Bitmine Immersion, this one had an absolutely insane week here. Let's take a look. Look at that week. Bet you wish you owned that company. So when they went rolling these, they rolled them to the following week, and then Bitmine just kept on going. So their 45s are 12.5% in the money with the stock over 51. They've also got 55s and 60s that are just about 7 and 16.6% out of the money. Yeah, this is an interesting thing. Some of our protection is actually at or higher, our put protection at or higher than the price of the lowest sold call. So in the event that the stock comes back down to make this a winning trade, it will actually make the protective puts winning trades as well. The goal is not to win on the protective puts. The stock had to drop to win on the protective puts, and they will never fully make up for the downside. So that's why we would rather it go up, because the move in share price will always outdo the option. All right, so if the stock runs up, it might cost us to close out the call, but it increases our value by more. Similarly, if the stock drops, runs down, it will actually hurt our value more than the put that protects it, but at least you've got the put to offset or mitigate the loss. You get some back for sure. All right, Webull, $15 even. They've got 1550s, 16s, and 17s sold for the week. 3.3, 6.6, and 13% out of the money. Coinbase, 310. They've had a rough run lately, but I think they had a good Friday. That's why these 305s that had already been rolled are 1.7% in the money. They've also got 320s that are 3% out of the money. Then they had a little fun, and I think, yeah, I did do that right. So then they sold a 255 put. So if you take a look, so these 305 calls go with these 260 puts. These 320 calls go with these 280 puts. But then they actually said, well, if we're protecting here, then we might as well sell a put here. And if these 260s and 280 puts never go in the money, then this 255 doesn't either. And it helped bring in a little bit of money to help pay for the protective puts. This is a strategy we've seen in the last week or two. I'm liking it. So instead of just the regular collar strategy where they sell a call and buy a put, right, you're giving up a little bit of the premium you collected from selling the call to buy your insurance policy. Well, they're also basically doing a almost like a spread to get back some of the money. It's another way to make some money to help pay for the put by selling another put further out of the money. It's not going to be anywhere near as much, but at least it's something to put towards it. So I like that new strategy that we're seeing from them. And I say new since the April 29th when I started covering them. Maybe they did it in the past and they're just bringing it back. But I like it. Not that my approval matters. Galaxy Digital, they've got calls sold for $28.50 and $29. They're 2.5% and 4.3% out of the money. We've got about $109 million kind of sitting ready to be used if needed. First American Government Obligation Funds. We've also got cash. Let's see if we got any cash. We got another $53 million in cash. So we're ready to jump at an opportunity, or pay out when we didn't make money on the option trades. Robinhood markets, 116s and 118s sold for this week, 1.2 and 2.9% out of the money. IonQ's got 42s and 43.50s. That 42 is close, 0.36. If you follow IonQ or follow me on my weekend videos where I show you my trades, they swing a lot. So starting the week, 0.36% out of the money is a little scary. Even the 3.9, I usually sell further out of the money than that. Mara Holdings, 1538. I am looking to get back into trading them some more. Tesla or TSLL getting out of the price range where I like to sell puts on it, so I might go back to selling puts on Mara. Back to this though, 1650 and 16 are the strike prices, 4 and 7.2% out of the money. MicroStrategy, hanging around that 400 spot, 395. They've got 415s and 417 sold, 417.50 sold this week, 5 and 5.6% out of the money. Nebius Group, 68.78. They've got 70s and 71s sold, 1.7 and 3.2% out of the money. Oklo sitting a little over 75. They've got strikes at 80, 83, and 85 sold for this week. Most at the 85. 6.2, 10.2, and 12.8% out of the money. Palantir, it just keeps going up. We'd have probably been better off just buying Palantir and not doing anything with it, because it's been doing very well for a nice long run now. That's over the past month. That's over the past 3 months. As your first really down included the whole time in 6 months. I mean, it just keeps churning up. So that's why we like Pallady. That's why that other YieldMax fund does so well. 186, almost 187. They've got 182 50s that are already in the money, 2.3%. That's going to hurt. 187 50s and 192 50s also sold for this week, 0.2 and just about 3% out of the money. Reddit, a little over 215. They've been on a run too. We're not going to keep going back to the stock chart every time. This video is getting long. 225s and 227 50s sold for this week, 4.4 and 5.6% out of the money. Rigetti Computing, 1544. They've got 16s and 1650s, 3.6 and 6.8% out of the money. Rocket Lab, 44.69. They've got 4750s and 48s sold for this week, 6.2 and 7.4% out of the money. SMCI, 4460. They've got 48s and 49s sold, 7.6 and 9.8% out of the money. New Scale Power, 3935. They've got strikes at 4250, 43, and 44. Most in the middle there at 43. They're 8, 9.2, and 11.8% out of the money. Unity Software, this one's fairly new to us this past week. 33 and a quarter was the closing price. They've got 34s and 34.50s, more than 10 times as many at the higher strike, 2.2 and 3.7% out of the money. And then Upstart Holdings is the last one we got out of. UVix, Vistra Corp, and Vertiv Holdings. So our list ends a little sooner. I think we have 24. I think I counted it yesterday. 68.76 is where Upstart's sitting. They've got 72s, 73s, and 78s sold. Again, most in the middle. 4.7, 6.1, and 13.4% in the money. Out of the money, sorry. All right, ULTY closed at 603 on Friday. We already talked about the IV. Net assets under management, $3,051,000,000 and change. There was an increase on Friday. More people buying into the fund. Actually slowing down though. So the last handful have been like 7.7, 10, 20, 30 million shares. So we only had an increase of 3.6 million shares, bringing our outstanding shares to 507,875,000. The NAV, that says 601. If you look at their website, they claim a slightly higher assets under management than this is literally a copy and paste of every single market value, of every single contract and share price, and then so obviously the math works out evenly. So it might be up another cent or two, but in general, it's within a couple pennies of the closing price. All right, so that's it for ULTY. Hope if you don't stick around for LFGY, then you miss out on the dad joke at the end, and that's the best part of the video. But quick, I don't know if I want to call this announcement or question. I am thinking about, with all this talk of salty coming out, which would be like an inverse ULTY, it would make sense to make this video more of a ULTY and salty video than a ULTY and LFGY. But I don't know how many people are here for LFGY. I would definitely have to sacrifice one for the other because I'm getting stretched a little thin. But so I'm just thinking about it because they do seem like they would go together very well. But first we got to see what it looks like when it comes out. All right, next we will check out LFGY. All right, we'll start like the last one on our trades. Now we just went from a $3 billion fund to a $180 million fund, so we've got to just adjust what we're looking for, what we're looking at when we're talking about numbers. Trading wise, on the first day, Monday, down 43, almost 44,000. On Tuesday, they had a surplus or credit of $164,000. Wednesday, $902,000 to the good. Thursday, down $480,000. Friday, got it back $489,000. So on the trading week, they made $1 million in profit trading options. If we were going to do our estimate based on that, we would just take that money and divide it out by the outstanding shares, and it would be 19.96 cents. So they made just about 20 cents a share to pay out. If you follow them at all, you know that would be less than half of what we're used to getting, so we don't think that's going to be enough. So next comes the IV estimate. So we will look at how we get to that. Quick side note, I did have somebody ask, can you put the previous distributions on the page? So I do, hold on each one of them. That didn't work. On each one of them, that's why we would skip from column H all the way to BT, because all the columns in between are just hidden. I generally leave the previous weeks up for a week, just so when the distributions get announced, I can show you what I guessed compared to what came out, how far off I was. Did pretty good last time, 1.5%. But I don't know if we want like a column. It almost doesn't make sense for me to have a column there, because if you wanted to look at it, you don't have as much access to. You'd have to pause the video and go back and try to look at it, compared to if you want to see previous distributions. I would recommend, right, you go to YieldMax's website, go to whichever ETF you're talking about, whether it's ULTY or LFGY. Right, we're already on ULTY for now, and you just scroll down. Here's your distributions. Here's last week, the week before, right? So date, everything. Nice, easy spot to go find all your information and to see all those 8, 9, 10 cent distributions. All right, I'm not saying no if everybody wants to see that, but you've got easy access to that anytime. I did jump ahead of myself, talked about trades without scrolling through, but there was a lot less trades. Thank you very much, LFGY fund managers. There was only about 140 trades, roughly. I kind of round to the nearest 10. Monday was literally 4 lines, right? Tuesday, Wednesday, Thursday, Friday. So this was by far the easiest week LFGY has ever given me. I've had days in both funds where just the trades for the day were over 140, so I don't mind that at all. Okay, as we go through LFGY, they didn't have any changes in underlyings, so I appreciate that a lot as well, because I have to redo formulas and correct like 3 different formulas every time we swap out a stock within the fund. So they are not, and I actually didn't do it yet, so let's do it right now together. We can see what the average weighting is, but they are not evenly allocated. There's been times where we've had 16 or 17% in one fund and like 1% in another. So we've got a 4.76% average, but you're gonna see 9s and 10s in there to make that average. We'll start off with Bitmine Immersion. We already talked about that in the last one, so we know it's got a nice high IV increase from last week to 140.6. They're about 2.76% of the holdings. BitDeer Technology, 3.7% of the holdings. That's a decrease, but still nice and high, 98% IV. That's definitely helping. CleanSpark, 3.6% of the money, has a 68% IV. That's a decrease. Coinbase Global, 7.8. Coinbase at one point was the 16%er, but we know they've had some rough times lately. 53.5% IV is a decrease from last week. Core Scientific, about 4.5% of the money, 80.7%. Basically, any number that's above their weighted average is always helping increase the weighted average. So that's up. Circle Internet Group, 3.5% of the money, has a 80.3% IV. It's a decrease, but still helps. Ethereum, iShares, Trust is 4.5% of the money. That's actually up from the previous week, 78.1%. Galaxy, 3.89%. Decreased to 86.2%, but still higher than our average, so helping us out. GameStop, 3.1% of the money, decreased to 44.8%. It seems to be really losing that meme stock status. I mean, it still stays alive, but it's not making crazy moves. Robinhood, more than 7% of the money. It's a decrease to 60.9% IV. HUD 8 Corp, 4.1% of the money, decreases to 78.4% IV. I believe that's still definitely above the average. IBIT, over 10.5% of the money, is 32.7% IV. Mara Holdings, 5.7%, down to 60.1% IV. Mercado Libre's IV dropped. I'm curious sometimes why this one's in here, but then again, I forget, this is not the high IV fund. That's what ULTY is. This is just them being able to trade options on crypto industry stocks and funds. So 4.29%, and their IV dropped to 28.7%. MicroStrategy, over 9% of the holdings, and it's a decrease to 52.9%. NU, 4.21, sorry, is a decrease to 47.9% IV. NVIDIA, 2.25% of the money, decreases to 42.8% IV. Opera, 4% of the money, it's an increase to 4% IV. PayPal, only 2.8% of our money, and it's at 26.5% IV. Is that our lowest? 26? It is. So PayPal is the lowest, but at the same time, we've only got 2.8% of the money in there. Riot Platforms, 4.2% of the money. It's a decrease to 69.1% IV. And finally, Block XYZ, 3.9% of the money, is a decrease to 35.9%. So again, their goal on these are not finding the highest IV funds. This is specifically a crypto portfolio, and how much money can we make trading options on crypto plays. But all of those get put in the formula, and it results in a decrease from last week, and we're down to 59.76% IV. And LFGY closed at 36.39, so we've got what we need now to go back and make our IV estimate. Let's take a quick look. So last week we had a 63.24% IV compared to 59.76, so that's a drop. But last week we had $35.62 was our closing price. This week that's higher, $36.59. So our IV dropped significantly. Our price increased moderately. So let's take a look at what that resulted in for our estimate, 41.82 cents. So it does keep decreasing, right? If we look recently, I was going to say, we didn't just get 47 cents, but they haven't updated their website for LFGY's most recent payment. But 47, 48, 47, 48, 46, 48. Yeah, so now we've got an estimate that's telling us 41.82. We did make some money to help put towards it. Fund price did all right. Increased in value. So my guesstimate is 42.5 cents. I think that's low, but I mean, I'm just gonna stick with my math and my numbers, and if it comes out higher, then we're all excited about it. But I'm guessing we're gonna be lower this week. I mean, we just watched most IVs drop, but they might make up for it because they've got some income to put towards it. It doesn't have to be a 100% return on capital. So, but it is what it is. That's just my guess. We'll see what it is. I say 42.5 cents. Okay, we take a look now at our options plays for this week to see where we're looking for these stocks to trade the range within in order to keep the majority of the premium collected. Now, LFGY does not trade the same strategy as ULTY. It is not a collar strategy. They sell calls to generate income, and then a lot of times they will buy a further out of the money call to help protect in the event that the stock runs past that, just to prevent them to have to pay too much to close it out. But there is no downside protection in LFGY. So if the stocks drop, LFGY drops, and there's nothing that helps make money off of that. All right, Bitmine Immersion sold strikes for $50. At one point when these got sold, they were 50% out of the money. They are now 2.7% in the money. But so here's the thing, right? So if they end up having to pay to close these out, at the close of Friday, they were $5, right, to close these out. They will drop throughout the week to, let's say, if it ended at 51.43 where it's starting, that's $1.43 in the money. It would cost roughly $1.43 per share to close it. They collected a whole lot more than that on the way, and their share values have increased nearly 50% in the meantime. So it'll still end up making out all right. BitDeer, 12.57. They've got 13s and 13.50s and 14s sold. 3.4, 7.4, and 11.3% out of the money. Clean Spark, just over $10. They've got 10.50s and 11s sold. 4.2 and 9.2% out of the money. They've also got calls protecting the 10.50s at 11.50. So basically, let's say the stock ran up to, $30, okay? Instead of being worried that now we got to pay, $19.50 to close these out, we do. But after it goes $1 beyond that, these purchase calls kick in, and these increase in value dollar for dollar as these get worse dollar for dollar. So worst case scenario, we're only losing $1 per share on the closeout. Now, we don't have protection on these 11s, though, but I don't think it's going to run to 30. But I've jinxed things before, trust me. Coinbase Global, 310. They've got 312.50 sold. They are 0.6% out of the money, so they are playing these tight. And if they continue to struggle, then it's good to play it tight. Core Scientific, 14.40. They've got 15 sold, 4% out of the money. Circle Internet Group, you never know what these guys are going to do. They're usually either the big winner of the day or the big loser of the day. They swing a lot. Can't believe their IV has dropped to 80. At one point, I think they were like 200. But 170s are 6.9% out of the money. ETHA, iShares Ethereum Trust, sitting at 30.79. They got 31 sold, 0.68% out of the money, or 21 cents. We got about $2.4 million sitting ready to go to work or ready to pay out in First American Government Obligation Funds. Galaxy Digital at 27.78. They've got 29 sold, expiring Friday, 4.3% out of the money. GameStop, 22.27. They've got 23 sold, 3.2% out of the money. Robinhood's at 114.63. They have 120s and 125 sold, evenly split, and they've got protection for, take your pick, whichever one you want. Most likely for the 120s, though. So it's an $8 spread, most they could lose per share. 4.6 and 9% out of the money. Hut 8 Corp, 19.46 closing price. They're 5.3% out of the money with those $20.50 strikes. I say this all the time. This one can just keep on going up as fast as it wants, increases our value with no options to worry about. I wonder why, though, they don't trade options on them, because I've had people comment that they trade options in IBIT almost weekly and do well. So not sure why they don't trade them. That'd be a good question if I ever work up the nerve to do an interview. Mara Holdings, 15.38 closing price. They've got 16s and 16.50 sold, 4 and 7.2% out of the money. MBTX, they've got two different positions here, or strategies. They've got a credit call spread where they've sold the 280 That's 1.6% out of the money with the stock at 275. And then they've also got another strategy, a debit put spread, where they purchased the 230 put expiring the end of the year. I forgot to mention the call spread is out till September 19th, so that doesn't necessarily need to be touched this week. So the put spread is a debit put spread, so that means they're betting on it to go down. So they purchased the 230 and they need the stock to drop in order for that to increase in value, and it's currently 16.5% out of the money. Mercado Libre, $2,353.70. They've got 2400s sold, 1.9% out of the money. MicroStrategy at $395. They've got 425s and 430s, 7.5% and 8.8% out of the money. For quick reference, MicroStrategy, LFGY plays them 425 and 430. ULTY plays them 415 and 417.50. So ULTY is taking the bigger risk, but they are trying to collect higher premium. So obviously, if you sold closer to the money, you're going to collect more money, on that sale because you took a bigger risk. LFGY is playing it a little safer. They're not going to get to collect as much money, but they got a lower chance of losing the trade. NU Holdings, 1230. They've got 13 sold, 5.6% out of the money. NVIDIA, 182.70. They've got 185 sold for this week, 1.2% out of the money. Opera's just under 16. They've got 1750s and 20s, much more at 20, 4,400 compared to less than 200, 9.9 and 25.6% out of the money. I'm wondering if Opera has earnings within this week for them to be selling, or if they just had a really bad day after the roll happened. That would have been something maybe I should have done my homework on, huh? PayPal Holdings, 67.65. They got 69 sold, 2% out of the money. Riot Platforms, 11.08, closing on Friday, $12 strike for this coming Friday, 8.3% out of the money. And last but not least, Block, 73.39 closing price, 78s are sold for Friday, 6.2% out of the money. All right, if we take a look at LFGY, they closed, like we said, 36.39 on Friday. There was no change in outstanding shares on Friday, so we still have 5,175,000. Assets under management is 186 million. So we still have not been able to break that 200 million mark. For some reason, the NAV and the share price have, I don't want to say become detached, because, we're talking about 37 cents different. A 1%, they're about 1% off. So there's about a 1% premium, and maybe it's because crypto, has that lure to it. But people are paying about 1% more than the value. So the NAV is literally, so here's everything in the fund. It's total up all the values of everything. It's just money, right? So total up all the money in the fund, and it comes out to, divided by the amount of shares, it comes out to 36.02. People are paying as much as 36.39 for it. Now we appreciate that extra because that extra is used in our multiplier for coming up with our IV estimate. So, but I don't know. I like it when the funds are within a penny or two of each other. So you're basically, in this case, every time you buy a share, you're buying $36.02 for $36.39. So I don't like to overpay, but everybody's different. I do have shares in this, though. In case you don't watch my other videos, I bought 100 shares of these back when I started making them, and I have them on drip in my 401k. So you won't see them on my trading review videos because that's just my after-tax money. In my after-tax account, though, I do have like 1,300 shares of ULTY, and I continue to buy them besides reinvesting. Okay, so we'll do a quick 30-second or less recap. ULTY, based on income, the estimate for this week would be negative, so we don't use it. Based on IV, the estimate for this week is 8.6 cents, which is a pretty good decrease from the last month or two. And then my personal guess given all the information, is about 9.1 cents per share. All right, let me know if you think that's high, low, if you're happy with that, if that's going to make you mad and make you run. I do want you to remember, though, the value is in, you still already have the value. So when they take it out of the share price and hand it to you, it's like taking money out of your bank and putting it in your pocket. You still have the money in the bank, you still have the money in your pocket. The two total up to your total. What's the difference? How much is where? But anyway, back to LFGY. They made almost 20 cents per share options trading, so good job on that. But they like to pay out close to their IV, and their IV math comes out to 41.82 cents. I'm telling you now, I think I'm guessing low. I think it's going to be higher, but I'd rather guess too low than guess too high. So my guess is 42.50, 42 cents, 42.5 cents. All right. If you stuck around this long, thank you very much. I'm about ready to get back to my family and vacation, go inside and get some breakfast going. So before I do, I just want to give you a dad joke of the day. So thank you for watching. Thank you for all the likes, shares, comments. I mean, it's amazing how much you guys have been helping me. All the people with the buy me a coffee and the super chats and super thanks. I never really saw that coming. I expected to make some money off of advertisers. I didn't expect so much generosity, and so I appreciate that very much. So, all right, dad joke of the day. What did the seal with one fin say to the shark? If seal is broken, do not consume. I like that one. I don't know if you guys do, but maybe the jokes are just for me. Okay, finish out having a good weekend. And again, I'm on vacation for the next week down at the beach, so there will be shortened videos, other than, obviously, this one's everyone's favorite, so I wanted to do it justice. All right, have a great day. Talk to you tomorrow.